What's up everyone, it's Caddy with MoneyVest. In today's video, we are going to be talking about one stock that is down a little bit over 42% from its all-time highs. Super high quality business, very strong company fundamentals, excellent balance sheet, good revenue growth. I'm going to break down every single detail about this business and why it is selling off. They've got earnings coming up in the first week of June. So strap in, it's going to be a little bit of a longer video, full detailed analysis on this stock. As always, if you enjoy it, find it helpful, please make sure that you drop a like. I would really appreciate that, and subscribe to the channel if you haven't already. And of course, the links to our Discord and Patreon is going to be down below. There is a 16% annual discount available for one more week until the end of this month. And of course, the fundamental analysis, technical analysis, options trading, psychology of investing, all these courses 50% off. Coupon code May50 also expires at the end of this month. So the company that we're talking about today is going to be none other than Lululemon Athletica, and this, again, one of the biggest retail brands in the world. They've got over 711 stores worldwide, with majority of stores, of course, in North America. Very popular brand over in the US and Canada, and they are down over 40%. So this right here is the return since the 07-08 great financial crisis. You'll notice that they have posted a very strong return of just a little bit over 13,498%. And this is the entire rally from lows of about $1.70 to now trading at just under $300 per share, with an all-time high sitting well over $400 per share. This is the overall return since they have gone public. So 2,321% gain. This is after the sell-off that we have witnessed of about 42% here, and zoomed in 3 consecutive months of red for Lululemon, down over 42%, trading now under $300 after hitting all-time highs, I believe, of well over $500. So if you come over to Lululemon over here, they have hit a new all-time high. This was the all-time high back in December of 23, which was at $516 per share. So this is the entire sell-off that we are witnessing, 3 consecutive months of red from the company. So before we get into this catalyst, I want to go over the reason why the stock price has been selling off. The sell-off basically began during the earnings from the company. Inventory levels have been increasing a little bit. The sell-through rates have been coming down, and there's been some concerns over softening demand from a consumer standpoint. So the sell-off really began from their previous earnings. This could have been a valuation issue, because we talked about how high quality stock Lululemon is, but at the same time trades at a very expensive valuation here. And that sell-off continued and accelerated a little bit further. Yesterday, it was down a little bit over 7% on the back of this news that their chief product officer, Sun Chloe, is actually resigning for other opportunity. So she is going to be leaving after 7 years of being with the company, and of course being responsible for product placement, shelf lives, product innovation, and of course launching new ideas, and again, just the 7-year success that Lululemon has seen. So a lot of analysts have come out and somewhat downgraded the stock because of this departure from Sun Chloe, who had held the post for the last 7 years, has resigned to pursue another opportunity. And again, the company Lululemon will now have Jonathan Chung, Global Creative Director, report directly to Chief Executive Calvin McDonald and oversee product design and innovation as well. And Chung has more than 30 years of experience in senior leadership roles at global brands as well. So there is a pretty good replacement, I would say, and Lululemon has also created a new team of leaders from merchandising and brand functions to manage global and regional go-to-market strategies, the company said in a statement. And Nikki Neuberger will become Chief Brand and Product Activation Manager to oversee merchandising, footwear, and product operations on top of her current responsibilities as well. Now, Tom Nikic, Wedbush analyst, said the sell-off seems to be overdone, which I do agree with. I think 7% sell-off for product officers' departure definitely does seem a little bit of an overreaction, but at the same time, you cannot discount the idea of her having such a significant impact on the company's products over the last 7 years. So she definitely does, credit is due to her for the successful release of several different products and offerings and innovation and creative ideas that she's brought to the table for Lululemon over the last 7 years. So that is where the credit is due. But at the same time, the stock price selling off 7%, market cap being lost so much due to this departure does seem a little bit overdone. due to how well liked and well respected Koi was by Wall Street as well. So Lululemon is also one of the biggest notable laggards in the S&P 500. So year to date, the stock is down over 41%. So pretty significant sell-off in the company, and this has definitely been probably one of the worst performing stocks in the S&P 500 as well. Now, while this can be attributed entirely to Ms. Koi's, we do believe that she played an instrumental part in Lululemon's success over the last 7+ years. Clearly, the narrative around the company has worsened, and as a result, we no longer think Lululemon will command the valuation multiples it has achieved in recent years. So I strongly believe that this was a valuation issue more so than anything else, because as we've already discussed, as companies' growth rates start to slow down, valuation multiples will also come down, right? Companies cannot demand such high multiples forever. And Wedbush lowered its price target on Lululemon from $492 down to $397 per share, but said the company's strong growth in international sales in the fourth quarter should provide cushion against slowing U.S. sales, and that reduced discounting online may signal the U.S. trends are starting to stabilize a little bit as well, because we did hear about some softening in the demand over in North America when they actually reported the previous quarter numbers and they guided for the current quarter as well. So we'd also note that the management believes the Q1 slowdown is due to more of the internal execution. And if this is really the case, Lulu has historically bounced back from these missteps very, very quickly. So Lulu's chief product officer is leaving. Wall Street was not expecting that. Koi's resignation appeared to take Wall Street by surprise, raising concerns for some analysts about Lululemon's product assortment and path for revenue growth as well. This is from Jeffrey. Analyst Randall Koenig wrote that we have visited many stores over the past several months and believe the company's product assortment is falling flat, and they rate the stock underperform with a price target of $240. There is an ample supply of SKUs across multiple colors, wide leg products that don't appear to be resonating, and accessories, particularly the belt bag, interest has waned since last year as well. So much so that they've actually, this person has come out, Jeffrey Koenig, and basically mentioned that Lululemon's business will crash next year. So Lulu's growth too far too fast, and that is again a very, very bearish take on the company. And there's been a lot of analysts that have now turned a little bit sour and more bearish on the company's projected numbers because of the departure, because of inventory levels kind of swelling up a little bit, and we're not seeing that sell-through rates with a lot of SKUs sitting on the shelves as well. So and again, a lot of retail companies kind of go through this inventory management where they may have a time period in their business cycle where inventories are piling up and they're not selling as much, where the demand is softening a little bit. But again, there's a little bit of a mixed analysis and overview that in the past, again, Lululemon has bounced back from these missteps fairly quickly. So the expectations are they're going to be doing that same exact process again. And not to mention that they already do have a pretty strong sort of a forecast, right? So by 2026, they are expecting for revenues to more than double to $12.5 billion. So this is a growth plan that they released in 2022. That the company's strong financial positioning, in addition to doubling men's and digital and quadrupling international revenues, other key financial goals of the company Power of 3x2 growth strategy include total net revenue growth of about 15% every year from 2021 through 2026, modest operating expansion annually, and EPS growth to outpace revenue growth. So we're expecting at least a 16% or more in earnings per share growth all the way through 2026. So that is actually a pretty good goal. And I would still consider this company a growth company, right? Because if they are forecasting about a 16% or more growth rate, that would be a growth company. And again, the real question is, can they actually achieve that, right? Can they actually execute on their promises of coming up with this 5-year plan, a 5-year growth plan to double the revenues to $12.5 billion and grow earnings per share by over 16% or more. Now, coming over to the actual numbers, this right here is going to be the overall breakdown. So 2023, 2022, and 2021. Majority of the revenues, of course, coming from Americas, although it has been slowing down 79% compared to 2 years ago when it was at 85%. And a lot of that growth has gone to rest of the world from 8% to now sitting at well over 11% because the demand for Lululemon products has really increased in other parts of the world. North America really just stabilizing a little bit. And this right here is the number of stores. Americas as of the January 28, 2024 quarter, 438, so 19 new stores added on a net basis in North America. Asia Pacific 98 compared to 91, so it's 7 more stores. And then rest of the world, including Europe, we're looking at 48, so 2 more new stores on a net basis. Overall, 711 stores compared to 655 same time last year. This is as of January 28th, 2024. And again, this right here is the overall numbers, 2021, 2022, and 2023. Strong growth in revenues, so consistent growth, 6.2 billion growing to 9.6 billion. That's over 50% growth in 2 years. Gross profit has gone from 3.6 to 5.6. That is also almost a 50% growth here on a 2-year basis. And then we've got operating income basically going from 1.3 to 2.1 billion dollars. So that is again over a 50% growth in 2 years, and net income going from 975 million to over 1.5 billion. That is going to be just over 58% growth in 2 years for the company. Margins also getting better from 15.6 to 16.1%. Gross profit margins from 57.7 to 58%, and operating margins going from 21.3 to 22% for the company as well. This right here is going to be the balance sheet. So current assets, including cash, sitting at $2.2 billion here for the business. Then we've got inventory levels, as you can see, 1.3 billion compared to same time last year, which is 1.4. So really, there's been some checks, and it's possible that, Koenig from Jefferies go through all these, I can't believe they're actually going through all these Lululemon stores and checking how well inventory is doing and what's the sell-through rates and SKUs. But again, I'm sure they're covering a very, very small market because, as I said, Lululemon has over 711 stores all over the world, so they can't possibly visit all of them and keep track of the overall trends for how inventory is moving in every single one of them over several months. So it's just not possible. So I would take that with a grain of salt, definitely, because inventory levels, yes, they have gone up on a quarter-over-quarter basis, but year-over-year, they're pretty flat. As I mentioned earlier, I think this is a little bit of an overdone overreaction from the markets, and I do think this is not so much to do with the departure of the chief product officer and the reassignment in the C-suite, but more towards the valuation multiples that Lululemon was trading at, which were already at pretty high levels. If you take a look at the total liabilities here, we're sitting at about $2.8 billion. So again, the company does have a pretty strong balance sheet because we are looking at cash alone that's sitting at over 2.2 billion. So if you come over to some of the other fundamentals, so you're looking at statistics, we are coming over to statements on balance sheet. The company does have a negative net debt of $840 million, which again is very strong, very good for the company in my opinion. Now coming over to the expectations, right? So Lululemon has about 121 shares outstanding. And that, of course, if we come over to statistics, has also been, fairly flat over the last several quarters, as you can see, and it's gone from 125 to 120. So we have seen a little bit of a buyback since 2017. And then if you come over to earnings expectations, we are looking at $14.18. So 14.18 multiplied by this share count, we're looking at a net income, a bottom line net profit of 1.7 billion. So if I apply 1.7 billion here, and let's just go with a growth rate of 15%, and then a multiple, which is going to have to come down because right now you'll notice that it's actually already down. It's already down to 26 and 4 times sales after the 42% sell-off. As you can see that in the past, price to earnings multiple was trading as much as 50, 47, 49, and 39, and then now 26, considering how much the sell-off has been. And you can see that back in 2020 it was at 73, then came down to as much as 42, then back up to 46, and back up to 39, and now it's back at 26. So I do believe the valuations have come down for Lululemon. So if we apply a 20 times P multiple, $289 ends up being the fair value. This is not even accounting for share buyback. So let's just say that they buy back about 0.5% of their share count as they have done in the past. Now we're looking at just under $300, which is exactly where Lululemon is at the moment. So 296 is the intrinsic value. 299 is going to be the market price, which means only 1% potential downside. This is going to be the entire sensitivity grid, and you can take a look and what makes sense for you in terms of growth rates and price to earnings multiple. I think 20 times P multiple on 15% growth is very reasonable. But I also want to mention that 2024, 2025, and 2026 is 3 years, and their growth plan started in 2021, and we're already accounting for 2028 net income. So we may have to go a little bit lower on the growth rate, maybe even down as much as 12%, because as I said, their growth plan started in 2021 and it's going all the way through 2026. That's the 5-year plan. And after that, they have made no forecasting, no promises that they're going to be expected to grow at over 15% or more in earnings per share. So we have to account for that as well. So I'm going a little bit lower, 12%, 20 times P multiple, 12% discount rate, 10% margin of safety, and we're sitting at just under 260. And that's going to be a 13% potential downside needed in order for Lululemon to be trading at its intrinsic value. And then, of course, if you come over to the actual analysis on the technicals, that sits perfectly inside this green rectangle at 265 to as much as 245. So 245 to 265, that $20 range, historically has acted as a very strong resistance. That was before the pandemic. And then after the pandemic, of course, after the rally, acted as a very strong support once, twice, 3 times, in and around that range. So let the price come to you. Very oversold on the RSI and the MACD. So there is a lot of potential in this stock right now because of these strong fundamentals, the high quality setup that it has, and let the price come to you. Let it cool off a little bit. I think inside this green rectangle is going to make for a very solid deal at 260, and intrinsic value sits at 259. I mean, there's so much confluence fundamentally and technically at 260 for Lululemon. Let me know your thoughts down in the comment section below. And what do you think about this business? Are you buying, selling, or holding Lululemon? What are your thoughts about this shakeup in the overall stock price? They are going to be reporting on June 5th. So leave your comments down below. As always, make sure that you drop a like, subscribe to the channel. Happy investing. I'll see you all in the next video.